Hello and welcome to BCR. Let's get your trading day started with the following financial news and market headlines.
Following a week where the market digested the PPI performance and data from the University of Michigan, the dollar continued to rise, with the US dollar index closing with a bullish candle for the fifth consecutive week. The PPI exceeded expectations in all aspects, even surpassing previous figures. This suggests that the upcoming PCE data in 2 weeks will also be problematic, indicating a potential rise. This means the Federal Reserve is likely to maintain a tight stance and not lower interest rates soon, as premature easing could trigger inflationary pressures. Due to the upward pressure from several other inflation indicators, rate cuts in March and May seem unlikely, and even June appears dubious. Gold slightly declined last week, marking the second consecutive weekly drop as hot data dampened prospects for an early Fed rate cut. The data revealed that US PPI in January rose more than expected. Another report on Tuesday showed that consumer prices in the US last month also exceeded expectations. Despite gold being considered a significant hedge, its interest rates do not offer the allure of yield bars. With the Fed unlikely to cut rates in March, gold is likely to oscillate at lower levels in the short term. The U.S. economy's robust growth, indicating a sharp rise in inflation levels, poses resistance to gold, with expectations for gold prices to further drop to around $1,960 per ounce. After a weaker-than-expected U.S. retail sales report last week ignited market hopes for the Federal Reserve to begin cutting rates in the coming months, WTI oil prices edged higher, marking a 2.17% increase for the week. Lower interest rates typically lead to higher oil prices as reduced costs spur increased activity, indicating a boost in demand for oil. Meanwhile, escalating geopolitical tensions in the Middle East could push WTI prices higher due to disruptions in crude supply. On the other hand, IEA forecasts a surplus in crude oil for 2024, projecting global oil consumption to grow by 1.2 million barrels per day, nearly half of last year's growth rate. This could potentially cap the upside for WTI prices.
We hope you enjoyed today's market outlook. If you have any questions or topics you'd like us to cover, feel free to leave a comment below. Remember to join us tomorrow morning for the freshest news